interview with JSPL's Managing Director VR Sharma, who's live with us on the market to talk about, well, the hot steel space, base metals, commodities at large. Good morning, Mr. Sharma. Thanks so much for joining us here. Before we get company specific, we're supposed to be in the middle of a super cycle of commodities. We've seen what's happened with steel prices, how they've behaved, how they've come down and cooled off so much. What's your assessment when it comes to steel prices going forward?
Yeah, thank you. You rightly said that, yes, the prices were up and now it is cooling off. I would say the prices are stable because the two regions, one is iron ore is stable and the coking coal prices have come down from $675 per ton to now it is $520, though the prices came down to a level of about $400. But in last 2 weeks' time, the prices again surges and it reached to a level of about $520 now. So I think the prices will remain stable in the rest of the month. And I'm not seeing any unexpected increase in the input costs. At the moment the Russian and Ukrainian war, this cools off or this ends, or say that there's a ceasefire, and then the overall the energy management, the world energy prices will take a new shape. And I think in the month of, especially in the month of June, we should see some respite in energy prices. And till that time, the prices are going to be stable. This is my view.
Okay, but can you also explain to us that if there is a lag in steel prices that needs to go up, if hikes need to be done, why are companies holding back from doing it? Or is that going to happen now and it's just a matter of time?
I would say it is a matter of time because it all depends upon two factors. One is what are the input costs and the other is demand. Today, I would say demand is also stable and the input costs are also stable. So the prices today you're seeing are going to continue for at least for another 1.5 to 2 months time. And as I told you earlier, in case the ceasefire takes place, then the energy prices worldwide will go down. And at that time, the coking coal prices, gas prices, and lubricants and oil prices, crude prices may soften. And that will definitely ease out the situation in times to come.
Sure. If you could just put us, put in numbers to that, Mr. Sharma. Just wanted to understand, because you have been aiming at achieving about, this ambitious target that you had set in about almost 9 million tons in FY23. So wanted to understand what kind of bottom line growth are you penciling in? What kind of a path do you really see? And do you think that this target is actually achievable looking at the way things are developing right now?
Yeah, you're right. So actually, if we take the history a little backward, we'll find that we were at 5.5 million ton 3 years back. And today we are at a level of 8 million ton. So an increase of more than 45% in last 3 years we have achieved. And the next milestone is going to be 9 million ton. Today we are at 8 million ton. We feel that it is very much feasible, possible, and we will be in a position to do it. We took 4 targets in past. One is 8 million ton of production and sales accordingly. And the other is 15. That is 15,000 rupees or more the EBITDA level, 15,000 crores or less should be the debt level, and more than 50,000 crores of sales turnover. So we have achieved all the 4 targets. And now I think the next target, reaching from 8 million ton to 9 million ton, will also be achieved. We will not be spending any capex in 8 to 9 million ton. This will be a journey from the internal modifications, upgradations, and developments. And finally, we are adding a capacity of another 6 million ton. We already declared a project of 18,000 crores, and this project is on stream. We are working very hard on this project. I think by the financial year 2024-25, we'll reach to a level of 15 million ton. The prices are stable, the business is stable, and the demand is stable, I think it is a good time for steel industry.
Good to hear that. But, just coming back on the subject of what my, co-anchor was actually probing you about, given that steel prices have cooled off from their February-March peaks, I just wanted to understand, how much more can you really undertake by way of price hikes? Is that not going to then impact demand at some point?
No, I'm not saying that there'll be any price hike, because I told you the price depends upon the three factors. One is iron ore prices, then coking coal and energy prices, and the demand scenario. So the demand worldwide is stable. There is no decline in demand as a whole. And the prices are also stable. The input costs are also stable. Unless the input costs, they go up, there won't be any price increase further. And the cooling off, if we say that, or we say the reduction in the prices, that has already taken place about 3,000 to 4,000 rupees a ton in last 15 to 20 days time. And that is because the coking coal prices and the iron ore prices have softened. Coking coal, as I told you, from $675, it has come down to $520. So immediately we have passed on that benefit to the customers.
Okay, I want to now move away from steel prices and talk to you specifically about what's happening at the company. So, Mr. Sharma, should we talk about the coal gasification plant that is being planned to set up? By when? What kind of capex? Why is this so crucial?
Yes, I'll tell you 2 points here. One is one of the first coal gasification plant of the country, as well as the first coal gasification unit feeding to DRI plant in the world that was commissioned by us in 2014. It is working very well. So we have had a very good experience. And now we are going to repeat the same technology, same size, same capacity in another plant that is called Raigad. So this is in Chhattisgarh state. So the existing plant is in Angul, that is in Odisha. So it will be a replica of existing plant. And the capacity will also be similar, 225,000 Nm³ per hour. And we're producing about 2 million ton DRI out of it. And we'll reduce our carbon footprint at least by 35 to 40%. We are not going to be dependent on coking coal and also on blast furnaces in times to come. We have taken up a decision that we will be producing at least 50% steel through DRI and electric arc furnaces so that we can reduce the overall carbon footprint. Both the plants which is existing and the new plant which is coming have a facility of capturing carbon. Our plant, which is in Angul now, it is also having a facility that we can capture the best of the best high purity carbon, that is CO2. And this carbon dioxide, we are now going to utilize to produce the downstream products. And these downstream products, we are working with various consultants in the world, that which are those products which can be feasible in India and which can be produced out of the CO2, what we are capturing from our gasification plant. And a similar facility will be installed in Raigad. So in nutshell, the overall carbon footprint we want to reduce from 2.5 ton of CO2 per ton of steel today to a level of 1.8 or maybe 1.85 ton per ton of making steel. So, and this is possible only when we reduce our dependence on the blast furnaces in coke oven, and we produce more and more DRI and more steel making through the electric arc furnaces route. And this is where the world is moving and world is heading to. And this will also help us in utilizing the circular economy. Through electric arc furnaces, we'll be in a position to utilize the scrap available locally or internationally. So the DRI and scrap will be a very good combination, and we can reduce our CO2 footprint. Perhaps we'll be the first company in the country who is going in major steel producers, who is going to aim on 50% of the steel through electric arc furnaces and another 50% steel through the blast furnaces route.
Okay. Coming back to the steel production, we saw record steel production. Mr. Sharma, let's make this a final question. We saw record production last year. Now, this financial year is, of course, beginning with a lot of volatility. It's beginning with a lot of uncertainty. Look what the IMF is saying, global growth, not great news coming in from Shanghai, Hong Kong. How will you do better than the last financial year?
Yes, you're right. Today's situation is that on the east side and west side, both sides there are troubles. But there are always opportunities in troubles. Shanghai is down, so we have more opportunity to export steel to Southeast Asian countries because the customers of Shanghai or the customers of China, they are dry. So the countries like Indonesia, Malaysia, Philippines, Thailand, they are the customers now because material is not coming from China. So there's an opportunity for the Indian steel mills. Similarly, there's a war on the west side. Ukraine and Russia, they are fighting. It is nearly 2 months now. It's very unfortunate. We hope that the war should end, but the situation, the practical situation, the pragmatic view cannot be ignored because due to this war, most of the steel mills in Mariupol or in Ukraine are devastated. And these mills will take some time to come back into production after the cooling of the war or after the war stops or the ceasefire takes place. And more so, Ukraine will be requiring steel, or they will be importing steel at least for next 1.5 or maybe 2 years to rebuild the nation. Because as per the news, what we are seeing on the television, so most of the cities they are destroyed, and all these cities will be built afresh. The world bodies, world economies, the world organizations will come forward to rebuild Ukraine. We hope so. And if that happens, then there'll be another increase in the steel consumption in Europe. So Ukraine alone was exporting about 22 to 24 million ton steel to Europe and to MENA countries, that is Middle East and North African countries. So that market today is dry, no matter what the prices are, but the steel is not available there. So Indian steel mills and Iranian steel mills have a great chance to fill in the gap. But Iran is under sanctions. So not many countries in Europe, they will buy from Iran, except some countries in MENA countries or say in Africa. But India stands a good chance here to keep on exporting to MENA as well as to European countries. So I feel that demand will be pretty stable, and the increase, say about 10 to 12% we are aiming, that will be consumed within the system. And Indian demand will also remain stable. We have a very positive outlook as far as India is concerned, and we have a very positive outlook on east and west side of the country.
That's so good to hear, Mr. Sharma, and glad that you could take time out and join us today. Thank you so much.